Hi everyone, hope you're all doing good. This is Trading Coach, and in today's video, we are going to talk about the trading psychology series. We are going to continue with our trading psychology video series. In today's topic, we will discuss about trading based on intuition and gut feelings. Specifically, we are going to understand whether intuitive trading works or not. We will clarify whether intuitive trading is a mistake or whether intuitive trading is an actual strategy. So there are many traders who trade purely based on intuition and gut feelings. They don't use any kind of strategy, techniques or whatever. And we will see whether this is a mistake or a proper trading approach. So before we dive in, I recommend you to hit on the subscribe button, tap on the notification icon. In case if you like to know more about me, more about my trading style, I recommend you to visit my website, that is www.tradingcoach.co.in. Let us dive in. What is intuitive trading? Well, when you trade based on gut feelings instead of using proper strategy and analysis. Alright? Say for example, if you feel that the market is going to go up, and if you buy the stock based on that feelings itself, you're actually doing something we call as intuitive trading. So if you're an intuitive trader, you simply trade based on the feelings. So there are no specific rules, model or technique. You don't take positions based on certain criteria. You trade purely based on intuition. So if you're actually wondering like who in the world is going to do this, well, there are many traders who are actually trading based on intuition. Most importantly, we can think about all these new traders, all these novice traders who are trading using nothing but just gut feelings and intuition in the markets. Let us talk about the logic behind intuitive trading. Well, most of the intuitive traders or the logic they use goes like this. If you spend enough time trading in the markets, if you get enough experience in the markets, somehow magically you will get the ability to trade. Alright, the major keyword here is somehow magically you will get the ability to trade. Alright, so to put it in a simple nutshell, if you have experience, you don't need any strategy or techniques or framework to trade. This is how intuitive trading usually goes on. This is the logic behind intuitive trading. To understand intuitive trading in real time, let us see an example of how intuitive trading works using the actual chart. Let us look at some charts and let us look at some actual examples. Alright folks, so let us look at how intuitive trading works using the actual chart. So right now I'm looking at Tata Steel Limited 1-day time. So I haven't done intuitive trading before. I haven't traded based on my gut feelings. I'm always an objective trader. But I know a couple of guys who usually do this kind of intuitive trading. Especially one of my students who does this kind of intuitive trading all the time. I'm going to walk you through how he trades through intuition. I'm going to walk you through how he takes the positions, how he looks at the market, etc. Alright. Of course, after taking up my training program, the way he looked at the market got completely changed. He is no longer doing intuitive trading. But when he came to me at first, this is how he traded the market. So I'm going to demonstrate how he does it. So this is how he explained it to me. Say for example, right now here we can see a large bullish candle, right? So large bullish candle technically mean buyers. We will just go ahead and buy the stock. Okay. So there is no specific position sizing, there is no measuring risk reward, there is no risk management, nothing here. I'm feeling that the prices are going to go up, so I'm going to buy the stock. Alright. Again, this is not how I do trading. This is how one of my students, when he came to me, did the trading. So I will buy here because the prices are going up because of the large candle that I see here. I don't know why I'm doing this. This is something that I do because I'm feeling to do so. Again, I don't have any risk management. I don't have any position sizing. Just I'm doing it because of the gut feelings. Likewise, if I have to sell this particular stock, what I will do is I will sell after this large bearish candle. Again, I don't know what quantity I'm going to exit, or I have no idea how much position sizing I will execute here. I don't know how to manage my trades. I will simply go ahead and sell the stock. So we sell here because of the large candle, because the prices are going down. Again, I'm not doing this. This is how he trades the market. This is how he traded the market. All right, I'm talking in the past tense. So initially the type of logic worked out here, but guess what happens if the same thought process was applied throughout the rest of the price series? All right, if we continue to do that exactly over here, let us think what would have happened. Okay, so what do you think would have happened? Would you have ended up with a lot of profitable trades, or do you think you would have ended up with a lot of losing trades? Let us find out. You can see all the tick marks as well as the wrong signs here. So the tick mark indicates all the successful trades which we might have taken if we followed the same logic. On the other hand, all this X mark is actually based on the losing trades which we might have taken if we have followed the same logic once again. As you can see, you have done the same thing again and again, so you might have had a couple of winning trades, of course. For example, you might have had somewhere around 1, 2, 3, 4, 5. So you might have had somewhere close to 5 winning trades. On the other hand, you would have had a lot of losing trades as well. Say for example, you might have had somewhere around 1, 2, 3, 4, 5 and 6 losing trades. So altogether, you might have had 5 winning trades and 6 losing trades if you have followed a similar logic. All right. So the logic is nothing but, you're just buying when the prices are going up and you're selling when the prices are going down. Okay. Again, this is a more rough explanation of how he was trading in the market using this gut feelings and intuitive trading. So again, he might have done a lot of other things as well. He might have taken more quantity or less quantity based on how he felt about the market at that particular point in time. But here itself you can see that particular logic is absolutely flawed. If you have taken a lot of trades, you can see that most of the trades would have ended up as a failure. No matter what kind of risk management you are going to focus, still you are going to end up as a losing proposition. All right, the entire trade is going to hit the losses. The overall trading performance will be on the negative side. Again, another important thing is, if you're an intuitive trader, you might have made a lot of mistakes as well. Say for example, you might have not kept the stop loss, you might have not kept the target, and also you might have completely ignored the aspects of risk management. So combining all these different errors which you might have done on your trading, there is a very good chance your entire trade is likely to be a losing proposition, right? So based on this one specific example itself, we can understand that trading based on intuition or gut feelings is not a good idea. And now let us answer the most important question in this particular video. Does intuitive trading works? It works for some traders and it may not work for other traders. All right. Let us discuss more about this. Well, it may not work for many traders. When you trade based on intuition and gut feelings, the major problem is there is no objectivity in your trades. If there is no objectivity, it's hard to recognize what you're doing as right or wrong. If this is the case, if the overall performance of intuitive trading is not good, then why many traders fall prey to it? There are a lot of reasons for it. I pointed out, first of all, there are some advantages in intuitive trading. For example, if you have good experience in the market, experience can definitely improve our trading performance. It can also improve our chart trading skills. All right. So many traders, what they think is, most of the traders, once they have some experience in the market, they think that the experience itself is enough to trade the market. But that doesn't mean intuitive trading is the solution for profits and easy money. Trading based on gut feelings is not the answer. Another major key point is, intuitive trading is also the shortcut for laziness. Well, it is always easy to trade without any techniques and strategy, right? So it's very easy to just rely on what your heart says. And after all, like, who want to take the headache of using this logical and rigorous analysis, right? So we don't want to do back testing, forward testing, or anything. We can just directly go ahead and apply what our heart says in the market so that we can end up making some easy profits. Well, it doesn't work like that. Real life trading doesn't work in that way. And let us get it straight. I'm trading in the market for almost 12 years. As long as I can say, in my experience, there is no magical ability to see the market without any model or strategy. I will say it again, I haven't developed any kind of magical ability to see the market without any model or strategy. Neither are most of the professional traders I know. Another important thing is, many traders who lost money in the market are actually these intuitive traders or gut feeling traders. Most of the students and mentees who came to me after losing money in the markets often didn't have a proper trading strategy, and they were doing, or they did, the so-called intuitive trading. Mostly this kind of intuitive trading is actually done by novice traders or beginners who are pretty new to the market. But not only that, sometimes this kind of intuitive trading is also done by professional traders who often don't pay attention to models, strategies, or frameworks, and it's a very big mistake. What's the antidote to intuitive trading? Well, if you're doing this kind of trading, the solution is very simple. You have to change or improve your trading process. Well, how to do that? You have to bring objectivity into your trading. So you have to start trading with a proper trading strategy. You need to define your trading process. You need to back test it and forward test it. Even if you're a discretionary trader, you have to create a step-by-step process for analyzing and taking trades in the market. And apart from that, it's also important to have a checklist and rules which can help you to take your trading decisions. So the major key point is, bring objectivity into your trading. Even if you're a discretionary trader, even if you're someone who trades without any rules, you have to create a kind of a checklist which will help you to take your trading decisions. If you have proper objectivity, that can make all the difference to be a successful trader. And finally, the true and tested method to succeed in trading is to avoid making big mistakes. Avoid making big mistakes which is made by other novice traders. Only way to do that is to have a defined trading process, is to have an objective trading process. Alright guys, so hope you liked the video. Hope you learned some valuable thing from this particular video. If you liked this video, please click on the like button. And if you have any doubts, any questions, if you like to ask me anything, if you like to leave some feedbacks, please leave it on the comment box below. I will try to go through it and I will try to answer it. If you have done intuitive trading, if you have done similar kind of trading without any objectives, leave it on the comment box. Share your experience on the comments. We can go through it. We all can learn from it. And apart from that, last but not least, thanks a lot for watching and happy trading.